Today I want to show you some absolute 100% proof that Citadel is manipulating the market. A biotech company has just sued Citadel for market manipulation. Now this isn't a lawsuit from the 90s or from the early 2000s, when the only people that cared about the stock market were the big institutions. This is a lawsuit happening right now in 2022, when the market is dominated by retail investors. So stay tuned and let's make some money. And now I'm going to dive straight in with the key information. So, Lit Exchange has tweeted saying breaking news. A biotech company, NWBO, accused Citadel Securities LLC, Susquehanna International Group LLP, and other Wall Street firms of driving down its stock price through a series of illicit trades. It says in a lawsuit filed Thursday in Manhattan Federal Court, Northwest Biotheraputics alleged that market makers had repeatedly engaged in spoofing, where traders placed orders with an intent to fool other investors about a stock's demand and manipulate the price. Now importantly, this article was posted and the lawsuit began on December 1st, 2022, or only a few days ago. And you may say, Tom, why is that important? Well, back in the 90s or the early noughties, where a number of our examples have previously came from, this is a time when nobody really cared about the stock market other than the big institutions. The only people losing money in the stock market was the big institutions, and I suppose arguably the companies themselves that were being destroyed by synthetic shorting. But importantly, back in the early 90s and the noughties, there was not hundreds of thousands and millions, if not tens of millions of retail investors losing money as a result of these crimes. Right now, these lawsuits are going to be made a lot more public, they're going to be taken more seriously, and they're going to be scrutinised with greater accuracy. They've also sued Canaccord Genuity, G1 Execution Services, Virtue Americas, and a few other market makers. And Laura Posner, a partner with Cohen Milstein, Sellers & Toll, who's representing Northwest Biotherapeutics, has said we have the hard data, and she said it's hard to dispute actual transactions and patterns. And this is important because earlier this year and last, JP Morgan received a massive fine for their spoofing in the precious metals market. And as a result, there has been some overhaul in that precious metals market as well. And it says Northwest argued that these market makers knew that it was unlawful to execute the alleged trading tactics and should have had procedures in place to detect and prevent them. They've said these market makers deliberately engaged in related spoofing that interfered with the natural forces of supply and demand and drove the share price downward over the course of the relevant period. And they've said these crimes occurred between December 2017 and August of 2022, obviously a very similar timeline to AMC, GameStop, Ape, and a number of other meme stock securities. And during this time, the company had released positive results from a trial of its lead product, a brain cancer treatment. And therefore this company was doing well, it was releasing positive news, and it was succeeding, all meanwhile being synthetically shorted and having the price spoofed. Obviously very similar to AMC and GameStop as well. I think it will be very interesting to see what happens during this lawsuit and to see what happens as a result. Whether Citadel will just receive a fine, whether people will end up in jail, or whether Citadel could be disqualified from being a market maker altogether. And we can actually see that lawsuit filed by Northwest Biotherapeutics against Canaccord Genuity, Citadel Securities, G1 Execution Services, Susquehanna, Virtue, and a number of other market makers. Obviously, I don't want to go through the entire lawsuit on a line-by-line basis, but I will link it down in the description below. I think it's disgusting how Citadel is shorting this company, even though it's successful and has positive brain cancer treatment results. Right now, Citadel is literally at the forefront of destroying potentially successful brain cancer treatment drugs. And on top of that, Eric Cutler has also tweeted saying, for everyone wondering what's happening on December 5th, 2022, there's an expiration of a no-action relief order given by the CFTC to entities dealing in swaps. He said, in my opinion, it is relevant to what's happening on a daily basis. And obviously, if you haven't already, be sure to join the free Discord linked in the description below. We currently have 1348 indicators and we talk about AMC and share due diligence all day long. And after finding out in my video yesterday that Moomoo does not engage in payment for order flow, be sure to sign up for Moomoo right now using the link in the description below. You can currently get $10 for absolutely free and 15 free stocks on top of that, worth up to $2,000 each. So we can see here on December 5th, 2022, there's an expiration of an extension of CFTC no action relief to entities submitting swaps for clearing by derivatives clearing organizations operating under CFTC exemptive orders or CFTC staff no action reliefs. What this is basically saying is that right now there's a number of entities that are currently exempt from submitting swap data, or have chosen not to submit that data and are basically being let off the hook and they're receiving no action. These entities obviously have market manipulative swaps and therefore they don't want to disclose them. They're choosing not to, but they haven't been fined or disqualified because they're receiving no action reliefs. This is obviously those total return swaps that were used by Archegos that ended up causing their demise and their liquidation. I imagine Archegos also had this same exemption, but either way they ended up blowing up. And obviously when these new entities are forced to report their positions, the CFTC will know they do hold illegal and manipulative swaps. It will be very interesting to see over the next few days if any of these total return swap contracts are forced to be closed. As a result, as Alessio Urban tweeted, he said the World Bank chief is currently worried about a disorderly default process. This could be related to those swaps or could just be related to the current market performance and the current market crash. The World Bank chief said, "I'm worried about a disorderly default process, where there's not a system to really address that for the poor countries." And he said, "We also have to really address for the advanced economies this giant build-up of debt, and so as the interest rates go up, the debt service goes up for the advanced economies, and that requires a big amount of capital from the world." This World Bank chief currently believes that potentially the entire world could default on its debt, and there would be a very disorderly default process or liquidation process. That would obviously involve tons of major banks and tons of major institutions being liquidated when they end up failing those margin calls. And as a prime example, as Eric tweeted, he said there's been $88 billion in withdrawals from Credit Suisse by former customers. This is obviously the start of that disorderly default and liquidation process, where many customers try to withdraw their money, causing a run on the banks. It says Credit Suisse chairman Axel Lehmann on Thursday said that it isn't surprising that shareholders haven't been enthusiastic about buying stock because of the dilution and current valuation. He said he blamed social media for causing customers to pull around $88 billion in deposits and investments between September 30th and November 11th. So in less than a month and a half, investors withdrew $88 billion from Credit Suisse. I think as more and more articles like this end up coming out, it will lead to more and more investors and customers of Credit Suisse withdrawing their money. Soon we're going to see this number going from 88 billion to 150 billion to 200 and 300 billion until Credit Suisse ends up running out of money and being liquidated. Credit Suisse will either be backstopped by the Fed or be forced to close out of all of their positions and all of their total return swap contracts. As we know that Credit Suisse is still holding these AMC, APE and GameStop swaps as a result of Archegos. And this is exactly why the CFTC is trying to force companies to now disclose their true swap positions, and why the World Bank chief is really worried about many of these major banks. It effectively all circles back to AMC, APE and GameStop, as these stocks are being manipulated and held down on purpose. On top of that, as Gold Telegraph tweeted, they said breaking news. Blackstone's $69 billion real estate fund says that it will limit redemption requests after breaching limits this quarter. So it's not just major banks like Credit Suisse where investors are trying to withdraw money, it's also major asset managers like Blackstone. If they're restricting or limiting withdrawals, there's currently no real difference between Blackstone and FTX. They obviously don't have that money available to pay back the investors, and that's why they're having to limit and suspend withdrawals. It says Blackstone's real estate fund became a massive player in the industry, snapping up apartments, suburban homes and dorms in recent years. But obviously due to the market slowdown and the current housing market crash, these investments are obviously worth nowhere near what was actually paid. Blackstone obviously overpaid on all of these properties, pushing the market up and inflating it artificially, but now that the market is falling, they're losing billions and billions of dollars. They therefore don't have these $69 million to return to investors because the money just isn't there and the properties aren't worth what they once were, and therefore that's why they're limiting and suspending withdrawals. Finally, it seems like these hedge funds either forgot to pay off the mainstream media this month, or they've run out of cash and can't afford their bribery bills. As Unusual was tweeted, they said CNN's chief executive has reportedly informed employees in an all-staff memo that layoffs are currently underway. CNN is now having to make layoffs, obviously because they don't have enough money. They obviously haven't been paid for these hedge funds, for their bribery, and for their FUD articles. It'll be very, very interesting to see if there's still the same amount of FUD articles now that many writers are being let go. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.